Well, good morning, everybody. This is Billy Trout with the Tennessee Department of Revenue's Taxpayer Education section. And on behalf of our Commissioner, David Geragino, and our Taxpayer Services Director, Elena Turner, we'd like to welcome you to today's presentation on sales tax issues for headquarters, data centers, and call centers. So this is a very specialized topic, and we thank you for joining us today and to learn a little bit more about these special types of situations that there can be some very special credits for that. So those are the topics that we're limiting our comments to today. So I want to let you know that up front. We know that several of you had submitted some questions prior to today's webinar that were not of these particular topics. So we will not be addressing those topics here, but we do invite you to call our call center or to send us an email at the contact information that you see on your slide here regarding those particular topics, and we are most happy to help you to do that. So I want to introduce to you first of all and let you know about a couple of the people that will be with us here for this presentation. We have an expert on staff, and this is Bhavna Shah. She will be joining us here. She is from our Audit Division's review team, and she has spent 16 years with the Department of Revenue, and she processes these particular exemptions. So she'll be a great resource for us as we go through and discuss a few of these points. And also we have Miss Katie Julian, who you see on screen here with you here at the top, who's going to walk you through the first part of this presentation as well. So if you have questions that relate directly to the topics that we'll be discussing today, we invite you to type them into the chat area, and we will do our best to try to address those either during the presentation or once Katie concludes her part of the presentation of the actual material itself, okay? So with that, Katie, I wanted to also tell you, Katie, that this is our 35th webinar. Can you
Oh,
believe it?
wow. Wow.
That's unbelievable. Katie and I have been doing this now for a number of months, and I hadn't realized exactly how many of these webinars we've done as far as presentations. Some more, some are combined, and we have more than one topic during that, but there's actually 34 different presentations. So today's number 35, Katie, and we'll see what we can do on this one for the folks. So I'll go ahead and go on mute and let you go ahead and do your thing. Thank you very much.
Great. Thank you, Billy. That's pretty cool. So 35 of these. You can view past webinars where you went to register for today's webinar. At the bottom of that page on our taxpayer education webpage, there's a webinar video library. It's also where we'll be posting this video tomorrow, maybe later today, but most likely tomorrow. You can also, if you want to go ahead and download a PDF of this presentation, the PowerPoint part of it, you can do that, and the website's right there in the middle of the slides you're looking at. You just go to our taxpayer education page from tn.gov/revenue, and then click on webinars, and you'll see a link to, I think it says class materials or materials for today's presentation. So with all that, and then one more thing before I get started, because I sometimes forget at the end, this is a monthly webinar that we do. It's on the last Tuesday of every month, rain or shine. And next month, we will be going over all the legislative updates that the new laws that have passed over the last couple months. We will be joined by someone from our legal staff and be a great overhead view of all the laws that passed and how we're going to administer them. So again, like Billy said, we are going over a pretty specific topic today. It's sales tax for data centers, headquarters, and call centers. We'll be going over specific sales tax issues for each of those qualifying types of businesses. And then at the end of about the second half of today's webinar, we'll be going through some frequently asked questions and share some resources with y'all. So a basic overview of sales tax law here, and then how it's going to somewhat relate to our topic today. The Retailer's Sales Tax Act imposes tax on tangible personal property and certain services that are listed. So with sales of tangible personal property, generally speaking, it's taxable unless there's a specific exemption by law. Sales of services are generally not taxable unless they're specifically listed in our law as being taxable or are part of the sales price. So sales may be exempt if the purchase is made by an exempt entity, and that's where what we're going to be going over today will play in. If the product is exempt, for example, healthcare products, or the usage of a product is exempt. So if it's used for industrial machinery, etc. The sales tax credit may also be applicable for certain qualified purchases, and that is also very applicable to what we're going to be going over today as well. So Tennessee Code Annotated 676-102 defines a data center. A qualified data center may make certain purchases exempt from sales tax. So how do we define a data center? Building, and in our law for the credit here, or for the exemption, we're talking about either newly constructed expansions of these buildings or remodeled data center buildings. Also, the definition of a data center is that it has to house high-tech computer systems and related equipment. So for a data center to qualify for this exemption, it has to meet these requirements over a 3-year investment period. So it has to make a capital investment of more than $100 million. That's a lot of zeros there. And our law defines capital investment as an increase of a business investment in real property, tangible personal property, or computer software owned or leased in the state, valued in accordance with generally accepted accounting principles. Sorry to have to read a slide there, but that's the exact definition there. Also, a capital investment is deemed to have been made as of the date of payment or the date the business entered into a legal binding contract for purchase or for construction. The other big qualification here for a data center is that it has to create at least 15 net new full-time employee jobs during that investment period. And here's the kicker: paying at least 150% of the state's average occupational wage. Very important there. And how do we define a full-time employee? A permanent rather than seasonal or part-time position for at least 12 consecutive months to a person at least 37.5 hours a week with a minimum health care. So the exemption, you've got a data center that's either being built, newly constructed, remodeled, expanded, plus the criteria we just went over, the capital investment of the 100 million, the job creation requirements met. And what do they get? They get some exempt purchases. They can purchase these things without paying sales tax: computers, software, computer related devices, repair, installation, warranties, and service contracts used in the operation, backup power infrastructure, cooling equipment used primarily for and necessary to the operation of the data center. And also, there is a special rate for those qualifying data centers of 1.5%. It's a reduced sales tax rate for the purchase of electricity. So how do we go about getting this exemption? So qualified data center exemption certificate is what is used to make the sales exempt from sales tax, and also to be able to purchase that get that reduced rate for electricity. And the process is you submit an application for each location of a qualified data center. And there's a link here to the form, to the application form. If you've got the PDF open to, you can click on that link. And we also have an important notice on this. It's important notice 1606, and it's basically from a few years back when the laws on this changed, and some of the criteria for employees and the amount of the investment changed. But that's kind of a semi-recent important notice there on this specific topic. Here's a snippet of what the application looks like. It's pretty straightforward with just basic information about your business and tax account information. Number 6 there, line item number 6, investment time period and it cannot exceed 3 years from. The investment period must be no longer than 3 years. However, the Commissioner of Economic and Community Development may extend it up to 4 years if good cause is shown, and that is something that may play in occasionally. So to qualify, the amount must be over 100 million. The investment will be deemed to have been made as of the date of payment or date of legally binding contract, and that amount of investment is line item number 7 there on the application. There's a requirement that you attach a description of the proposed capital investment as well. Each one of these items has to be completed in full, and then the application signed and mailed to the Department of Revenue. And on our website, I'll share some resources later. There is a link over to this as well with instructions, more detailed instructions for each line of the application here. Let me go back one. Maybe we can discuss this a little more with Bhavna when we have Q&A at the end here. But I know that part of this process is also getting a letter of approval from the Department of Revenue. So we can talk to Bhavna about that a little bit more here in a little while. All right, moving on to headquarters. A taxpayer will qualify for a headquarters tax credit if it meets certain criteria, as well as certain private communications services are exempt from sales tax for qualifying headquarters. And information, the laws on this is found in the TCA 67.6, sections 389 and 224. All right, the definition of a headquarters facility. So we're looking at a facility in Tennessee housing international or national headquarters where staff employees are located and employed, and where the primary headquarters related functions and services are performed. So the facility must be used as a headquarters for at least 10 years from the end of the investment period. So how to qualify. There's a headquarters facility tax credit for all sales and use taxes paid to the state of Tennessee, except for a remaining amount of 0.5% on qualified tangible personal property for construction of a new, expanded, or remodeled facility. To qualify, these criteria must be met. So the entity has to construct, expand, or remodel, similar to data centers, a headquarter facility. The entity has a minimum capital investment of at least $10 million, and the entity creates at least 100 new full-time employee jobs. So these criteria are a little bit different than the data center criteria that we've discussed. So we've got a headquarters that meets the definition of what a headquarters is in our law, plus the construction, either new construction, remodeled, or expansion of that building, meeting the capital investment requirements and the job creation requirements. And what do they get after they apply and receive approval for this? They get credit for sales taxes paid for construction. Pretty cool incentive there. So how to apply? Here's the process. You apply by using the application for headquarters facility sales and use tax credit form, and there's a link here. You'll receive, upon approval, you'll receive a tentative approval letter, and then after paying the taxes, the qualified headquarters facility would use the claim for credit or refund of sales and use tax to get the credit. And here's a link to that claim for credit or refund form here as well. Here's what the application looks like. Again, pretty straightforward. So again, once you're approved and receive the temporary approval letter, you can begin submitting claims for credit then, and the letter that you get from us will outline a few more instructions there and let you know the amount of credit that you may take. And the letter will also detail the process a little bit further. It's important to note here that you cannot take the credit, you cannot use the credit until you have received that temporary approval letter from us. Another thing to note here, if there's a lessor, the lessor will have to submit an application as well. So the headquarters facility owner and lessor would both submit application. On line 18 of our sales tax report return, that's where you'll report credit. And like I said, there's further instructions on how to do this in that temporary approval letter that you get from us. All right, a little bit more about headquarters. Private communication services are exempt for qualified headquarters facilities. The private communication services are exempt when such services are utilized for communications with a computer or telecommunications center located in this state and by a taxpayer that is qualified for the headquarters tax credit provided for in TCA 6224 that we just went over. And it also can be by an affiliate of the taxpayer. An affiliate is defined as any person controlling, controlled by, or under common control with such person. So control meaning power to direct management or policies of a person, whether through ownership of voting securities, contract, or otherwise. The exemption here, private communication services are defined as telecommunication services that entitle a customer to exclusive or priority use of a communications channel or group of channels, regardless of the way these channels are connected. Some examples here: dedicated access lines, switching capability, extension lines, stations, or any other associated services that are provided with connection to those types of channels. So we've got a qualifying headquarters that we already went through the process of qualifying for that headquarters tax credit. And then you've got some qualifying private communications that we just discussed. Apply and receive approval, and then the private communication services are exempt from sales tax. How to apply here, again, once you apply for that headquarters tax credit, you'll get a copy of an authorization letter for this as well, or you can use the fully completed streamlined sales tax certificate of exemption to provide to your dealers. All right, moving into call centers here. In TCA 676-356 says that there's a sales tax exemption for the purchase of interstate and international telecommunications services used in the operation of a call center. Oh, can't flip the slide. Here we go. Call center is defined in our law as a single location that uses telecommunications services in any of the following activities: customer service, soliciting sales, reactivating dormant accounts, conducting surveys or research, fundraising, collection of receivables, receiving reservations, receiving orders, or taking orders. It's what probably most everyone thinks of as a call center. It's pretty simple there. For a call center to qualify for the exemption for the purchase of these telecommunications services, it has to meet this criteria. First, meet the definition that we just discussed. Second, have at least 250 employee jobs engaged primarily in call center activities. And then third, submit the application. Here we've got a link to it. Application will be approved by the department and the taxpayer issued a call center exemption certificate if they do qualify and receive that approval. Here is what the application for call centers looks like. Basic information again here. And that covers the credits and exemptions for these three entities: headquarters, data centers, call centers. I want to share with you some resources here from our website. If you go to www.tn.gov/revenue and up at the top, or click on the tile for taxes and then scroll down to sales and use tax, you'll find lots of great information there that details everything we just went over with headquarters, data centers, and call centers. Also, from our main homepage, if you click on Revenue Help, that's our frequently asked questions and articles about all of tax topics, but you can specifically click on sales and use tax. You can also type in keywords into the search there. That's also a way that you can, if you don't find the answer there that you want, you can click right on submit a question from that page, and it sends a message right over to us with any question that you've got. I mentioned earlier about our taxpayer education tax webinars page, which you already know about if you're on this webinar. But the webinar video archive is a really great resource just to peruse, but specifically we have a great one from just a few months ago on completing the sales tax return. So that might be helpful and go hand in hand with helping a lot of you that are on this webinar here today. Finally, here we had some of this info on our first slide, but this is the email, the website, and then email to send us a question directly if you've got questions that don't get answered in today's webinar, or perhaps maybe an account specific question that we don't want to bring up with everyone, but it's real specific to your account. Send that to that email address or call our call center Monday through Friday, 8 to 4:30, 615-253-0600. You'll get a real human being on the line, and someone will be happy to help you that way as well. And with that, I will go ahead and turn things over to Billy and Dan and Bhavna to go over some questions that may have come in. Hey, Billy.
Hey, thank you very much, Katie. Actually, I don't think we have any questions at this time, but we appreciate your presentation there. As you guys can see, this is clearly a very technical topic. That's one of the reasons we wanted to go ahead and cover this in a webinar format, because we realize that even though these topics are sort of rare, it's nice to have a resource out there that you can go to get some information about how this whole process works. So with that, I'll ask Bhavna to come online with us here and have a little bit of a discussion about a couple of things here. So we'll get you to start your audio and video. That would be great. We'll go ahead and talk about a couple of things here too. Again, like Katie said too, we do have these webinars previously done in our library out there, and we do keep them out there for as long as we need to. So far, we haven't needed to take any of them off. And of course, next next month, we have a great one on legislative updates, laws that have been changed in the last legislative session that will be very beneficial to you. So, Bhavna, thank you for joining us. How are you doing today?
I'm good, and thank you.
Well, great, great. So, Bhavna is our expert, as we had talked about earlier. She knows everything because she has worked in the audit division and worked with these particular credits for years. So, Bhavna, I know that when we were talking the other day about this topic, we were talking about one of the questions that one of the participants did submit early on jobs tax credits, and the fact that there is a jobs tax credit for franchise and excise tax in Tennessee, but then we have these credits relating to these topics that we're talking about today. Can you talk for just a second about what that means, and if they are necessarily the same thing?
Job tax credit and the qualified data center, they both are different. The qualified data center is an exemption job tax credit that is based on the franchise and excise tax. Citation that is Tennessee Code 67-4-2109. So they have, if one thinks that they qualify for the job tax credit, they have to meet the criteria that is listed under 67-4-2109. For the qualified data center, if the qualified data center has a 15 jobs and they meet the criteria under the qualified data center requirement, they have to also meet the requirement under the job tax credit law. If they meet that criteria besides the qualified data center, then they can apply for the job tax credit.
Okay.
So they are both are different, and one has to meet both criteria in order for to qualify for both.
Okay. Very good. Very good. So there's two different types of credits, and the qualifications are different, and the application of them is different as well. Okay. Very
For the
very
job tax credit, there are some more a requirement that needs to be met.
Okay. Okay. That makes sense too, as far as that goes too. I thought one of the more interesting things, excuse me, one of the more interesting things that I learned in this presentation is the fact that these credits that are allowed from this are allowed once sales taxes have been paid, and then credits are issued back from folks like yourself in the audit division that approve these credits for use against liabilities. That is so much different than regular exemptions that are up front, that entities like nonprofits and governments and people like that use, even resale certificates by businesses, and things like that. So it's such a different thing, but the whole process is able to be done through, and it all starts with the applications. Isn't that about right?
Yes, especially when we talk about the headquarter facility tax credit. Yes, that is the same scenario. Uh, One has to qualify for the headquarter as a headquarter facility, meet all the criteria. Once the tentative approval letter is issued by us, then the taxpayer will start submitting the claim for the headquarter credit on the tangible personal property that they have purchased during the investment period. And once that claim is reviewed and agreed upon, and when we issue the approval letter for the claim, with that approval letter, the instruction will go to the taxpayer and how to apply the credit towards the future liability.
Right.
So once it is approved, it's that credit stays on the taxpayer's account. And when they are ready to apply towards the future liability, there is an instruction that is being followed, and that is how it is being applied to the taxpayer's future liability.
Right, right. They have to let you guys know that they wish to use that credit so you can make that credit available, correct?
Yes, it is already on the account. It is available. Just a matter of applying towards the liability.
Oh, very good, very good, very good. Yeah, so I think one thing to probably remember here, everyone should probably think about, okay, so why do we even have these credits? What's the whole purpose behind it? And I think it's pretty easy to see what's going on here. The Tennessee State Legislature, of course, passes laws, and then, of course, they're signed by the governor or put into law to benefit Tennesseans and to keep our laws in the way that our legislators, as elected representatives, wish to administer law in Tennessee. So that all being said, if you look at this and you look at these types of credits with the high dollar investments that are necessary in order to bring these types of companies to Tennessee so that they will invest in our people and our infrastructure and things of that nature, it's pretty easy to see that the reasoning behind this is so that we can increase the quality of life for Tennesseans here. And that's what the legislature's intent is, I believe, as far as that goes. Otherwise, it would seem not in their best interest to forgive tax, but clearly they've chosen to do that. And we at the Department of Revenue, of course, are very glad to assist any companies that wish to invest in Tennessee with any of these credits or other credits that we might have. We can explain things to you. So if you do have questions about these types of things, if you will call us, if you will email us, reach out, and if we do not have the answer for you, we will find others in the department that are experts, such as Bhavna and other folks out there that are very, very keyed into this type of stuff to get you the information that you need so you can make a great decision to join us here in Tennessee. Okay. Trying to think of any other things that we might have missed. Bhavna, are there any hints or helpful hints you would like to give to folks that might be submitting paperwork to us? Things that people might miss sometimes or anything like that?
The one thing I would say that if anyone would like to submit the application on the back of the application, please go through the instruction that is very well explained. Uh, Submit all the documents with the application that is suggested as a support. And once it comes to us at the Department of Revenue, then it makes the process go very quick to go for the review of the application. And that's about it.
Oh, great. Great. Yeah. Yeah. We sort of joke sometimes. I've been doing state and federal taxes for a few decades. And one of the jokes that I hear all the time is maybe if we read the instructions, things would be a lot easier. And it's sort of a joke, and it's sort of not a joke. We do try very hard to put the right instructions out there too. And of course, we're all human. We're going to make mistakes and not
Yes.
see things like the way we need to, and that's fine. I think Bhavna would back this up too. If we get an application in that uh, contains maybe not all of the information or maybe something that's unclear, I believe that Bhavna or anybody in her office would reach out to you and say, hey, we don't really understand what's going on here. Can you give us some more information so we could make a good decision? And we're glad to do that. We're not going to just deny your application. We're going to work with you. Is that about right?
That is very true. When I personally review the application, if I need some more information or the clarification, definitely I'll go back to the contact information that is provided with the application and request more information. So yes, that is there. And I was going to say the same thing that you mentioned. Anytime during the filling out the application, if there is any question, just give us a call or send us the email with the question, and we'll be happy to assist.
Ah, that's great. That's
And
great.
that is why we are here.
Ah, perfect. Perfect. Okay. Well, Katie, Bhavna, and Dan, who's online with us as well, I think that pretty much concludes this. I don't see any pending questions or anything like that. But Katie, is there anything you'd like to point out as we wrap up?
Let's see here. Yeah, no, we don't have any more questions in the chat right now. Actually, hold on. There's one that came into me privately here. For call centers which use online software and associated with the call center, is that still eligible for the exemption? Um, are either of y'all aware of that?
Is that meaning maybe people that work from home now in call center jobs versus a location? That might be what they're going with when they say online. I'll
I think
bet you.
so. Yeah, well, that would definitely be at least part of what could be being used for online software for a call center, I would imagine.
Bhavna,
Um,
do we have any precedent on that yet, relative to the work from home sort of thing that's been going on the last couple of years?
Um, Especially for the call center, I think nothing specific under the law at this moment. Uh, but as long as it meets the definition of the call center, as Katie just put the slide on, and it lists all the requirement. If that software is being used at the call center for the call center purpose, if there is enough information, I think then we definitely look at it, and based on that information, we'll decide if that is allowable for the exemption or not.
Right, and yeah, that's important. So I think the biggest thing, and I'm glad you changed the slide, Katie, too. So if you look at these qualifications on here, um, my advice, as I've told taxpayers, and a lot of us would tell taxpayers on a daily basis, nothing ventured, nothing gained. In other words, if you feel like you've got enough investment, enough of the qualifications met to qualify for the credits, please apply. You know, uh, we'll go through things and we'll work with you, and wherever the law allows it, we'll give you what you need, as far as that goes. If the law doesn't allow for it, of course, we're going to have to tell you that, and that's fine. But the main thing we want you to do is to seek any available credits that you might qualify for. And so after you've looked at this application and you've read these instructions and you kind of feel like you do meet it, send it in. Let us look at this stuff. Let us try to help you. Okay. And if you want to ask questions ahead of time to help us clarify things for you, yeah, you're welcome to do that. And like I said before, we'll seek experts out where we need to as well to help you. Okay, great.
I've had a couple questions, y'all, about can we view the slides for today? So I just went ahead and put a link in the chat to exactly the page you need to go to click. Right now, you can hit the little blue button that says click here to download class materials. Those are the PDFs. If you want to watch the whole thing as a video and this whole presentation, including the Q&A and this talk we're having right now, you can go to this same website, web page tomorrow, probably about by mid-morning, midday tomorrow. And then under the webinar video library, you'll find the video to this one underneath the sales and use tax drop down.
Mhm. And I do want to also give you just that one more commercial for next month's webinar too on legislative updates. This is probably, well, I won't say it may, I guess it might be one of the most popular webinars we do on an annual basis because there's so many laws that change in Tennessee, and we'll have a representative from our legal staff on board with us next month to go through some of this stuff. And there's quite a few changes. There's some changes in sales tax, a little bit and really a lot of other taxes too. So we really encourage you to sign up for that because it'll be a little bit more diverse discussion than what we have today. But at any rate, if there's no other questions, I guess we'll go ahead and wrap up. Is that okay with the ladies on board here?
I'm going to add one more thing to what you were just talking about,
Please do.
Billy.
Please do.
I'm going to put a link real quick into our legislative summaries page on our website. If you are planning on attending next month, which hopefully you are, in advance of attending, if you've got the time, you may want to click on the 2021 legislative summaries just to see what we will be discussing. It's a
Is,
breakdown here
hey,
of,
Katie, is 2022 out there or is it just 21?
oh, 2022 is not out there yet, so
But
never
hey,
mind.
no, no, no. Listen, that's okay because I feel like it's probably going to come in the next couple of weeks.
I think
So
so.
if they're going to attend the webinar, I'm pretty sure they're going to have that summaries out there ahead of time.
Yes. Also, you can go
Yeah.
to on our under tax resources on our website, important notices. We've
Hmm.
already put out important notices for all of the laws, I believe, or most of the new laws. You can check them out there as well in advance of our
Definitely.
webinar.
Definitely.
One more
Okay.
thing too, as we say goodbye and thank you all for joining us today. Thank you so much, Bhavna. Having your expertise on with us was incredible. Again, this is something that Billy and I don't deal with every day, and you do.
For
So
sure.
very grateful to have you with us. As you are exiting the webinar, please fill out the survey. It's really quick. It'll help us uh, get your feedback and know if there's anything we need to do to help make these better or more helpful for you. Hopefully you have learned something new today. I know I did. And if we don't have anything else, we'll just go ahead and say goodbye for the month, and we'll see you next month on July 26th.
Thank
Bye,
you.
everybody. Thank you very much for attending today.